Hello, and welcome to Bridgeford Trust Company's Delivering Direction and Control podcast series. Our podcast series is designed to educate, challenge, and inspire listeners while keeping you updated on developments regarding modern trust law and powerful planning opportunities available, all in an effort to deliver direction and control to clients and their advisors.
Well, hello again, everybody. This is David Warren from Bridgeford Trust Company. Of course, one of our founders and chair of our board. Extremely enthusiastic and excited about another episode of our podcast series. Now over 60 episodes. I continue to say I'm amazed at the quality of thought leadership we've been able to talk to over the years, not just across the United States, but really around the world. And we're humbled by the followership. And today's another one of these special days. I love talking to, as I said, thought leaders and like-minded people in our community. And Jason Levey for sure is one of those individuals. I met Jason through a mutual client. We had a quick drink at a hotel lounge somewhere in Newport, I think was our first encounter. And I very quickly realized that we had a tremendous amount in common relative to the way we view the world. We come out the industry from different disciplines, perhaps, as we're a trust company and they're an advisory firm in the investment management space, but for sure aligned in the way that we look at independence and avoiding conflict of interest and all of those things that are passion points for Bridgeford and themes on this podcast for the last 2 or 3 years. And I those who pay attention to us in Bridgeford know that the independence and conflict-free it has to be the future of this industry. And the interesting thing is Canterbury consultants always had that paradigm since 1988. And so just a word about Canterbury, which is very impressive. I mean, again, I mentioned they were 1988. Jason, these numbers may be a little old, but I think you probably have exceeded 70 billion of assets that you all look after and advise on, I would presume. Just a number look like, yeah, exactly. And that looked like a little old number. 3 offices, one in Newport, Seattle, Washington, and Tempe, Arizona. And wildly independent, just like Bridgeford. So I think that's a perfect way to lead in to Jason. Just a word about Jason. He began his career at Morgan Stanley, has been at Canterbury for the bulk of his career, and doing a myriad of activity, which we'll talk about, oversees various aspects of business operation. And there's an outsourced CIO, outsourced CIO process that Jason will talk about that he oversees as well. And most impressive, as you can see, at his young age of 22, he's recently become, you're welcome, he's recently become the CEO of Canterbury, which to me is extremely impressive, not just given his age, but given the brain power and the way that he's gone about the industry. So Jason, I really am thrilled we're here. I've been thinking about doing this interview with you now for a long time since we've gotten to know each other and been able to do some collaborative thinking. So Jason, thank you for being here with us.
Thank you for having me.
Absolutely. So why don't we go right to the heart of what it is you, as Canterbury, has protected since 1988. Talk to me about the independence, first of all. And second of all, why is that so important in your space? And how do you execute it?
Yeah, well, thanks for the question. And again, thanks for being here, having me here, David. So, as you mentioned, 1988 was really an interesting time in the RIA space. Canterbury was really born out of this move to independence. A lot of individuals starting independent RIA firms. And from our standpoint, interestingly, as the industry has gone more to the other side, there is a big move in rolling up RIAs, becoming part of bigger platforms. That differentiator that was unique almost 40 years ago, in our mind, is becoming unique once again, because we find ourselves on a smaller and smaller list of independent RIA firms. Yeah. And there's the obvious reasons why being independent is important, at least in our minds. It keeps us conflict free. We can truly sit on the same side of the table of a nonprofit, of a large family, and we have no skin in the game other than what's best for the family. We don't charge clients fees for products. We don't charge clients project fees. We establish a reasonable arrangement with the organization or the family, and then we are just looking to seek the best outcome possible for their organization or their family.
And I want to get into that in more detail because I love the model. I do think it's interesting in our industry how the pendulum sort of swings. It's the same thing on this trust space. For the longest time, the trust department was attached to an asset management bank. Trust department
Yeah.
is what it was, and then we've seen that pendulum swing. But I want to go back to the definition of independence for Canterbury. So. No private equity ownership and totally owned by your employee base, which, as you know, is something that has intrigued me ever since I got to know you and your model. And that's really where Bridgeford's going as well, because we're so protective of the being independent and making our own decisions. But without getting into the details of how you do it, though, I described it right. I mean, you're completely privately held and you're employee owned in essence. Is that correct?
That's right. And I'll highlight one item for you. So there's 70 employees at Canterbury, 18 of them are shareholders. We have been very intentional about being employee owned. It simply keeps all of the outside pressures and short term thinking that other organizations will impose
Absolutely.
off of our agenda. So we can think very long term, and we
Mhm.
just try to obsess about what clients care about and what they value. But secondarily is the culture aspect.
Yes.
So as I mentioned, there's 18 shareholders. I'm one of them. We all write after tax checks every year to the business to keep our independence.
Hmm.
And in our view, there is a very different level of ownership and service. And ultimately, as I said earlier, why you hire a wealth manager, why you hire OCIO, whatever the form is you're seeking successful outcomes for your organization or your family. And we believe it results in better outcomes when we have people who are invested, not just because it's their job, but because in most of our cases, and certainly my case, it's your single biggest investment in your life.
Yeah.
And so you will just go that extra mile for clients, in our opinion, when that's the case.
So, and I love that model so much. Just to comment on that, I mean, I've said to you, one of our biggest challenges as both of us as business owners is having a team that's engaged, not just because it's a paycheck or a 9 to 5, but because they believe. I call it a saga, and I want people to believe in the saga. And what you have conjured up is a way to get people to have, as you say, skin in the game, but also really believe in what they're doing. So if somebody really believes in what they're doing, then it becomes less work and more of a vision for the future of the company. So congratulations on what you guys have built over the years. I think it's a tremendous model, and I think it will propel you to growing and staying independent. And let's go back to the independence, though. So I'm so intrigued by the way, and you've said it, but I think it's been overused. But you guys actually really embody this, sitting on the same side of the table as the client. I remember when everybody started to say that, and it was kind of became trendy and in vogue. I don't know, back when I was very young, after I stopped practicing law. But you really are executing that, and it's the same thing where everybody calls themselves a family office. Well, not really. Not everybody is a family office, but when you define no conflict and sitting on the same side, explain that, because it's clearly enunciated on your website, which I love, but lay it out for our audience, because I think it's a compelling proposition.
Yeah, when you move into some of the larger firms and the bank platforms, and those are great firms, they provide great service. Uh, but there is a definitional conflict of interest because there are multiple lines of revenue that they can and or will achieve from a single relationship. And that may
Mhm.
be through product that they also have, that may be through lending services, that may be through other forms of what they're trying to solve for the organization or the family. We have a very boring, clean line of business. It's advice. So when we're sitting with the family, our only objective is to give them good advice. So we're not charging them other fees. And in most cases, a lot of our arrangements are flat fee, which is also
Mhm.
different for our industry, where we will sit down, especially on the family side, and we have a literal checklist that we have the family check off boxes. And then we
Mhm.
propose a fee based on the services we're going to deliver, not based on the assets we're going to try to invest for them. And it really prevents other conflicts where advisors can become very territorial about the assets because they want to build
Right.
on them.
Right.
We try
Right.
to eliminate even that, especially for families who have real estate or other assets off the balance sheet or an operating business. We think we'd be doing them a disservice if we didn't look at the whole picture. And by having a flat fee for families, it really takes that conflict off the table.
Yep. No, and it's you described our business model as well. Talk about with me the fact, I know you don't take commissions. I know you don't share fees with the providers, which I think is um, unique in my opinion, based on my experience in the marketplace, and that your fee is your fee, period, and there's nothing hidden about it. But you also don't push product or a particular approach relative to what makes you the most money at the end of the day. And I guess I'm juxtaposing that to a broker model. And I know the broker model is certainly fallen out of favor, but even RIAs who say they're independent typically aren't really, because they're pushing a certain hedge fund or they're pushing a certain product, and often the client doesn't realize where the fees are. So differentiate that for me, because
Yeah.
I think that's a big difference between you and others in the marketplace.
Yeah, it's something we look at all the time. And a lot of the business we get is from somebody we introduced to. They work with XYZ advisor. And it starts with a simple of, would you like us just to look at what you're doing? And it comes down to, what do you own? What are you paying for it? Where is it located? And how is it doing? And it's a very independent way of just saying, how is your investment program going relative to the objectives that you stated for it? And are you fully aware of what you own and why you own it, what you're paying for it? And from our standpoint, and I want to be very clear, we do have product. There are different reasons to have product. We will commingle assets with clients to get better terms with a manager, or to be able to access something that we otherwise couldn't. Or for a lot of our foundations, we have a fund of funds because they prefer to go into one vehicle instead of 8. We do all that, but we never layer on a fee for clients for doing it. It's all as part of a service.
And that's the key. I think that's the major differentiator, because it's completely transparent. And I guess that's really what I was trying to focus on. Yeah. No, you should be congratulated. And I think our audience needs to make that distinction. And so talk to me a little bit about the typical client demographic that you work with. I know you have work in the international space as well, which I love, but give us a snapshot of the type of family you typically engage with.
Yeah, so there are two types of clients. There's the nonprofit side, but I'll focus on the family side for the sake of this part. And we break down families into really 2 buckets, and there's roughly 80 families at the firm. One is what we would call high net worth or wealth management clients. You could think of them as somewhere between 10 or 20 in investable assets up to maybe $100 million in investable assets. And then you talk about families that have balance sheets in excess of $100 million. And we have 15 families roughly that fall into that bucket, from the low 100 millions up to a few $1 billion in assets. And I'm talking about operating businesses, investable assets, real estate, et cetera. And our work it is really to be the quarterback of the relationship. So I mentioned the checklist earlier. We have some clients that literally check every box of the checklist, and we're working through the portfolio and risk analysis and reporting and administration and implementation and governance and stewardship training with the children, philanthropy, everything under the sun. We're not lawyers, we're not tax people, but we know enough to be dangerous, and we know when to call in the Bridgefords of the world and say, this is something we need to have an expert come in. And so our job is to simply understand a family, and we have this saying internally, we want the highest and best use of a family's assets. Simple, full.
Say that again. That's great.
We want to make sure that the family's assets are being used to the highest and best use. And so
fantastic.
You have a pool of capital, you're a very wealthy family. It often stops making $1, $2, and there's something bigger that you're trying to achieve. And that can be related to business, to philanthropy, to an area of the world that you're very interested in moving the needle on, your children, and it's often a myriad of these things.
The concept of legacy planning is so huge. I was just on a panel this week for Step LA as part of their annual conference, and that was a topic, and it continues to be a red hot topic, sort of the touchy-feely side, which has been said in our career, in our lifetime. So it is bigger than just what's the return on investment. There's so many other things that go into a successful family over multiple generations, and I'm happy to hear you're focusing on that and bringing in the experts, because we do the same thing. I mean, we don't do the family meetings, but we know in some cases that's more important to our patriarch not ruining the next generation and subsequent generations with all this money. And we talk about it in the context of not of protecting the next generation from themselves. And we got excited about the show Succession and all those things. So I'm very happy to hear you guys are focused on that as well.
Yeah, there's another concept we talk about with clients and families, which is this idea of 97% and 3%. And what we mean is, when you have wealth, 97% of what an advisor will do for you has to be good and needs to deliver, but it's very common advisor to advisor. Anybody can get you exposure to the S&P 500. Anybody can get you an asset allocation study. Anybody can make sure that you've got the right risk in your portfolio. But it's the 3%, it's the softer part of wealth. It's what is your plan for transitioning wealth down to your children? When do you let your children know how many zeros exist
Right.
on the balance sheet? How do you let them know?
Absolutely.
How do you give them control? How do you give them influence? How do you set up your estate plan? Where does the family foundation fit into all this? And the 3%, while maybe small relative to the other 97% of things that are going on, that's the 3% we focus on, and that's the 3% we find families value the most.
I agree completely. I think it's and to miss that aspect of planning in our industry, I think, is a disservice to large families, right? Because it's so essential. Well, I mean, I love the business model. I love the independence, and I think, as I said, we're so unbelievably well aligned in the way that we go to market and look at client service. But I want to transition a bit into some topics that we sort of can't ignore. And I think I'll go first to the undeniable and recently inescapable geopolitical chaos that has happened in the last, I don't know, 2 years, I'll say, that we're seeing things impacting decision making that perhaps we never would have dreamed we were going to see. And, I'm a little bit older than you, had practiced law for years. And so I'm on a weekly basis continue to be shocked, and that's not a political statement. I'm always careful to say it's just a statement of fact, and it places it makes your job harder because you're trying to figure out the best way to steward these assets and where asset class allocation and all of the things, because you have to figure out a way to read the tea leaves a little bit, and I think that's part of what your magic is in your industry, your side of the industry. But I would like you to comment on what you're seeing, how you're looking at portfolios. I mean, one day there's going to be tariffs, next day there isn't. One day there's a war, next day there isn't. Various shocking things come out of Washington these days. And again, it's not political. It just is a statement of fact, which means that we as advisors have to be paying attention, right? We can't pretend this stuff isn't happening around us. We can't put our heads in the sand. That is a huge disservice to families. And it's a topic that I really think we can't ignore, as I've said a few times. And I actually commonly talk about in the presentations I do around the country and around the world to solicit feedback. So how is Canterbury? I mean, I'm sure you're not ignoring this. And I would just like some big picture thoughts in terms of how you're positioning your clients or suggesting your clients protect themselves, because there's a lot of unrest and uncertainty right now.
I love the question, David, because it blends the two sides of what we do together. There is the analysis and the math and all of the different simulations you can run, and then there's human behavior. And I always think about, I went to school, I studied finance, never imagined how much time I would spend and others would spend on the other side of the softer part of wealth. Mm-hmm. And I think there's a great saying out there, the market, and I'm paraphrasing, tends to climb a wall of worry. And that's really interesting because it always feels scary to some extent. When it doesn't, that's usually when you hit the euphoria phase, like we've had in the past, like we had in 05, 06, where everybody was plowing into the market, or maybe it was during the dot-com crisis. And you never know. The market never rings a bell and says, this is the top. We're about to hit a bear market. And right. So by nature, you tend to have people always be a little bit more pessimistic than maybe they should be. And it really goes back to the work you do beforehand with families. And it's hard because when you sit with a family, either at the onset or ongoing, and you can show them scenario after scenario of drawdown and challenging markets, but they are not feeling it in that moment. And until you feel what it is to lose capital, it is really hard to judge. And I mentioned having a plan. There's another great saying everybody knows, everybody's got a plan until they get punched in the face. And it's very much like that saying where you have to build a plan with a family, and it has to be able to survive a wide range of outcomes. And if you find yourself in a scenario where you're forced to make bad decisions at the wrong time, that's when you can turn volatility, prices moving around, into permanent loss of capital. Yeah. And our job one is to make sure families don't get themselves into that situation, which happens all the time with leverage or concentration risk or too much equity risk in a portfolio. And I bring all this up relative to the current environment because we have to remind clients, if you have generational wealth, your time horizon is theoretically indefinite. You are
Yeah.
going to have more assets than you can ever spend in your next generation and the next generation can spend.
Yeah.
And so help them think in that sense. And then we're just solving for what is tolerable for you all. So we are in a tough environment right now. I can build you a case that equities are massively overvalued. The AI boom is pushing everything too far. I could also build you a case that we're about to hit the golden age of GDP and we're going to see earnings explode. And so there is no one answer. There is no what do you do across the board. It is knowing a family deeply, knowing what their spending is, what their tolerance is, what other assets they have, and making sure we build them a custom program. And for some clients, that means right now we're getting more conservative because of what else they have going on. And for other clients, it's business as usual because they're going to be fine and we can ride through whatever kind of volatility that comes. I'm sorry for using all these phrases, but there's one more that I think is awesome.
No, I'm going to write down all these quotes and start to use them. Please keep going.
Howard Marks, who is the founder of Oaktree, has another great one about market timing. And people fool themselves all the time. I'm not market timing. I'm being tactical. Well, what is tactical? That's just another word for you're making a short-term bet because you think you know what the short-term outcome is. And I'll paraphrase Howard Marks, but he has a great saying regarding what the market's going to do is there's those who know they don't know, and then those who don't know they don't know. And it's the second category of people who don't know that they don't know what the market's going to do that finds himself in trouble. And the single biggest mistakes I've ever seen made are two families who there was a geopolitical event and they pick up the phone and they say, I know the market's going down X% because of this. And they do something drastic. And that's when you really make a mistake as an investor. So being able to be long-term and ride through different cycles is the entire trick of managing wealth over long periods of time.
Yeah. No, I think that's perfectly said. And you touched on something that I really wanted to get into, which is this whole explosion of AI and its impact on virtually every aspect, I guess, of our professional and somewhat personal lives. And I'd love to get your thoughts. I know you your company authored a paper, AI Inflection Points, which had a really interesting thesis to it. I'm interested in a couple of things, not just as an investment opportunity. You know, I get that there's money to be made there, and you can certainly comment on that. But really, how is it going to impact your industry, in your opinion? Because I have some thoughts on how it's going to impact my side of the equation, my side of the industry. Because I've heard it said by some commentators that as AI becomes smarter, it's going to make you and I less relevant to our client base or in the industry. Not you and I personally, but the services we provide. I adamantly don't agree with that because I believe this is always still going to be a relationship business, and you can't replace Jason or David with a robot or an AI application. But how are you? Respond to that point, and then also talk about how you're harnessing AI to make your company more efficient.
Yeah. Well, at the onset, we do believe that AI is the next platform shift. It is the next major wave, like the internet, like mobile, like cloud, but potentially bigger than all of them. So, people say, is it real? It is real. What's interesting is when you look at where most of the value capture has been so far, it's been at the infrastructure layer. It's the NVIDIAs, it's the hyperscalers. And when you look and talk to people, big companies, small companies, and you look for how they're using AI, what the productivity gains are yet, it's hard to point to a lot of those material changes because people are still figuring it out. And I'll be honest that I don't exactly know the answer to your question, which is how is it going to change? But I do know that the important part is going to be around data and how do you organize, query, access, share, or not share proprietary data and the way you analyze data. And I think one large outcome from all this for our industry will be if you're not using AI to form your thoughts, to be able to diligence managers, to look at portfolios, et cetera, you're just going to be far behind those who are because it's going to speed up the entire cycle of accessing and understanding information.
Yeah.
And that probably takes a firm like ours with 70 people that could serve 200 clients previously, and maybe we can serve 300 clients with the same employee base because you take an analyst who was great and now they're a 5 times analyst, just like you're seeing with coding, where you take an engineer that becomes a 10x engineer if they're using Codex or Claude Code or whatever it may be.
Yeah.
So there's back when we were having some of this early platform shift into AI, Chris Dixon, who's a partner at A16Z, he was talking about when the mobile phone came out initially, you knew it was cool and we all wanted one. But in 2008, if I told you, David, in a few years, you're going to use this phone and you're going to hit a button and a stranger is going to come pick you up in their car and you're going to get in, you would have looked at me like I had three eyes. That was Uber. And the point of it is when there's a new technology emerging, it is hard to predict what the use cases are going to be 3, 5, 10, 20 years from now. Yeah. But no doubt there will be additional use cases. And I think it really will result in more productivity, probably better service for everybody, democratization of information. And it's going to be really exciting to see where it goes. And you asked about us. We are in that early stage right now. We are trying to understand what are the big questions we ask and clients ask us all the time. Mm-hmm. And that sounds like a very simple thing, but if you talk to anybody at the firm, you say, what'd you do this week? They may give you 15 things they did, and then they may give you 15 new ones the next week. Yeah. But we're trying to hone in on what are the big questions we care about and clients care about. And then the next stage is where we're going to go, which is what is all the data we need to be able to answer those questions? And you have to sort of do a building block approach to get organized, to be able to enable the AI to do a good job for you, because it's garbage in, garbage out. If you put in bad data or unstructured data that you can't query, it's not really going to do any good for you. And I think everybody's in that early stage of trying to figure out what to use it for and how to use it.
No, we're in the same stage too, and it's just like it reminds me a little bit of crypto in that we can pretend AI isn't going to impact us, or you can pretend, or you can think crypto is going to go away, but both aren't going away. And I've read a lot of articles about AI, of doomsday sort of articles, how it's going to end up destroying industries and taking over the planet, and it makes me kind of chuckle. I share your enthusiasm for it, and we're doing the same thing at Bridgeford. We've engaged some AI experts and trying to figure out where do we go next to harness the power and make us more efficient. And it's funny. I love the AI expert we talked to said nobody's an expert in AI the next day. So somebody today may know everything about it, but then tomorrow it changes so fast that whoever said they were an expert yesterday isn't anymore, because it's almost impossible to keep pace. And to me that's daunting. I mean, because I don't know what I don't know sometimes, and so we're trying to harness it so we know how to use it at its best capacity. But I tell you, I mean, again, I'm a little older than you, but it's sometimes hard for me to get my mind around its total capability. Same thing with crypto, which is probably a really good transition there too. I mean, we've taken a position at Bridgeford, whatever nefarious connotation was with crypto in the early stages, it's here to stay. It's not going anywhere. We hold it in trust if it's structured properly. I certainly probably don't understand it as well as you do, but that's another one of those conversations that if you ignore it, it's to your detriment. And how have you approached it at the firm? I mean, I'm sure you haven't ignored it. I'm sure you have clients that want an opinion about it. What's your current thinking on crypto?
Yeah, and it seems like everybody who had crypto on their company deck a couple of years ago now have AI on their company deck. It is a perfect segue. We started investing in crypto early, in sort of 2017 relatively early, 2017, 2018. Mm-hmm. And we took a balanced approach. We had clients investing in Bitcoin and Ethereum as, again, more of the infrastructure layer, to go back to the AI example. And then we had some venture investments going in to try to figure out, well, what will the applications be that are built on top of crypto? And I think it's hard to get your mind around, Bitcoin and does it have value? We'll steal some examples from our friends over at Bitwise, who we work with a lot on the crypto side, mm-hmm. and they just simply think of it as a software. If you think about Bitcoin, it has better properties than other forms of currency. There's a fixed limit. You can transfer it instantly. You don't need a bank account. Mm-hmm. If I just told you there was a software out there that did those relative to sending a wire, you would say, yeah, I probably see some value in a software that can do things more efficiently with lower fees, faster, et cetera. And so with crypto, we've obviously gone through cycles. We're going through another cycle now, but we do think it's a technology that is here to stay. There's likely a world where, just like now everything runs on the cloud and you don't even think about it, there will probably be a lot of payment systems that run on blockchains because it's more efficient, and you won't even really think about it. They'll be much more natural. We've certainly seen that with stable coins, which is one of the big early winners. And it's just a better way for you to get dollar exposure than it is to own maybe treasuries. And
Sure.
so we think it's a technology that's here to stay. We think it could be an infrastructure for obviously finance that is very large out there. And there will be, you see with some of the betting markets, there will be a lot of use cases. And I think the technology of blockchains are very valuable.
Mhm.
And we probably got a little distracted with, NFTs and other parts of the market that were more
Yeah.
speculative. And we're sort of moving back to the actual use cases.
Well, I mean, you should be commended as a group for embracing what is in the unknown a little bit. I know that people tend to be a bit more conservative in our industry and get nervous instead of getting excited about change like this. I mean, I think it's all part of the entrepreneurial mindset that I know we have at Bridgeford and Amplify. So these things are not to be feared, to be embraced, in my opinion. And I know it sounds like you guys are doing the same thing. And it's even more germane to your business, because if you don't figure it out and figure out how to leverage it, that's, again, a disservice to your client base, right? So you need to be the first to understand it and to implement it, which I think is a great way to bring in or go to my beginning of congratulating you personally for your relative new role at Canterbury. I met you. I always said I was so impressed with your demeanor and the way you look at the world. You and I have a common belief as to how to engage our client base and our prospective clients. And I know you and I share a common passion for the right way to do business development. But when you became CEO of the company, I was really proud to hear that, because it makes perfect sense given what I know about you. So congratulations on that. That's not a small feat, especially at your age. And I know you have a lot of vision for it, for what you want to do. And we've talked a little bit about it, but talk to me a bit about that. Tell our audience. I mean, where do you want to take Canterbury? What's the next big idea, if you don't mind sharing? And where are you going? Where are you going to take the company that's already great?
Well, thank you for the congratulations. And I have to say, we do have an amazing team. I mentioned there's 70 people. And I view my role as really hopefully the steward of the next 40 years. I mean, we have a great brand, we have a great business, we have amazing clients. And in a lot of ways, we want to do more of the same, but just on a bigger scale. We want to grow. And so I think we do a really good job for clients. We didn't talk a lot about our private market access, but we've been investing in private markets for 30 years. There is a lot of good in private markets, and there's a lot of bad in private markets. And we think we have some secret sauce, especially on the venture and co-invest side, that we've been doing for 15 years or so. And so in a lot of ways, we have been a boutique sized firm, which we want to keep, but we do want to enable the next generation. And we're talking about people across the country. You mentioned our offices are mostly West Coast based right now, but there is a lot of opportunity across the country. And you mentioned earlier that we are international.
Yep.
Well, our second largest growing segment within family office is Canada, and Canadian market is ripe for our type of model. And in a lot of ways, it's just making sure that we are staying true to who we are and what's made us special for 40 years, but hopefully doing it at a little faster pace on a growth scale. And so that really is incumbent on all of us to find the next generation of consultants and research team and analysts, and make sure that they are able to continue to deliver our services in the same way as we grow. That's a challenge as businesses grow, as you open other offices, is can you keep that secret sauce? And so we just want to be very intentional and make sure that I started the conversation talking about outcomes. I'll finish this end by saying we don't want to sacrifice what a client experience or an outcome because we're trying to grow too fast. And that really speaks to our plans.
You couldn't have said that more perfect. We're in the same issue. We have the same issue at Bridgeford as well. Is we have a very clear trajectory, but we all know what happens if we go too fast, right? And the values are lost. The fact that both firms are not for sale, I think, is something to say again. I mean, we plan to maintain our independence, and I know you all do too. And I'm just, I love your enthusiasm. I love your energy. I know that we share a common vision for how we want to grow and accelerate and still be of use, proper use to families in multiple different disciplines. So again, congratulations. And
thank you.
I'd like to sort of end the conversation, and then we could pick it up later at Gulfstream if you like. I noticed you do some nonprofit work, and I wanted you to comment on that, because you said earlier, and now we've said it a couple of times, and I love the phrase "to be of use." Well, just being of use professionally is great, but to be of use to your community is exemplary. And I see that you're on the board of um, Project Hope Alliance, which is, I know, a very impactful organization. So talk to me a little bit about that.
Yeah, I would say more broadly, and it's something I'd like to do more of as I continue my career. I think we have a unique vantage point. We've been on the other side of the table. We've seen a lot of good decisions and good process, and then we've seen a lot of not so good decisions and process, for nonprofits. And so I would almost point to it's a broader effort at the firm. A lot of folks volunteer.
Great.
We focus on supporting our local colleges. So all of our interns and about 90% of our new hires come from our intern program are from UCI and Cal State Fullerton and Cal State Long Beach and Chapman. And broadly speaking, we as an organization, given our client base and our families, believe in giving back. The firm also will take on some smaller nonprofits on a pro bono basis just to help get them off the ground.
Yep.
And it's just something we're passionate about. We feel very lucky. We feel very fortunate. I think if you asked everybody at the firm, they believe we all need to give back. And so that happens in various ways across the firm. And it's something I hope we can do more as we go forward.
Well, and it's an amazing culture to cultivate and to promulgate, and we're trying to do the same thing at Bridgeford as well. I mean, at the end of the day, we're part of a community that we need to support, so it's incredibly admirable. And as is everything you've done, I'm pleased that we have met through a mutual client. I see our firms being very well positioned to do some great collaborative work because we're definitely in the same space, but targeting different disciplines and conversations, but all in the context of trying to be of use to these large families around the country and across the world. So thank you again for taking the time. For the audience, Jason and the firm's information, of course, is attached. I encourage you highly to take a close look at them. As we've pointed out several times, their wild independence is something that's very attractive to me. I'm sure will be attractive to lots of people in the audience and listening. And Jason's direct information will be there as well. So Jason, I'll say again, congratulations to what the firm has done since 1988. Congratulations on your career. And I look forward to great work together.
Thank you, David. This was fun. I appreciate you having me.
Thanks again for listening to Bridgeford Trust Company's Delivering Direction and Control podcast series. Be sure to subscribe to our podcast to keep posted on when new episodes are added. And for more information, you can visit us online at bridgefordtrust.com.